Now, Market Day on the SBS On The Money podcast.
It was a quiet day on the Australian share market today. The S&P ASX 200 down 0.2% on this Wednesday, the 10th of July 2024. For the details, I spoke with Kai Chen, Chief Operating Officer at MPC Markets. Kai, first of all, what's driving the market today?
Yeah, we saw a pretty strong performance from the S&P last night in the US, and that was from Powell giving his testimony to Congress. It was pretty dovish in terms of sentiment, so we saw that the tech stocks rallied again last night, Nvidia up 2.5%, Apple rallying as well. But today in the ASX, it was a little bit softer due to material sector, which didn't perform as well. And we're seeing at the close of the market, it down about 0.1%.
You touched there on Jerome Powell speaking overnight. Any indication as to when rates may be cut in the US?
Yeah, so I think with the Federal Reserve Chairman, he's a little bit worried about potentially higher borrowing costs for businesses and impacting on the labour market. Now, the market is pricing a 0.25 cut in September and potentially 2 cuts leading up to Christmas in December.
What about the rest of the world? Because we know here the talk is of the potential for higher interest rates, right? We hear more about how the August RBA board meeting may be a live one. Across the Tasman in New Zealand, it left rates on hold today, but there appears to be a clear change of tone, right?
Yeah, absolutely. We're seeing a little bit of divergence, especially in Australia and New Zealand, where, the inflation figures have come out pretty high over the last report. But there's a difference in terms of sentiment across globally, where in Europe, we're starting to see rate cuts as well as in Canada. So the ECB cut, had one cut, as well as Canada, where there was another cut. It's diverging in terms of expectations, but globally in general, we are seeing inflation figures come down. But I think for the RBA, it will be a tricky position.
We also had some inflation numbers come out of China today, up a less than expected 0.2%. What does that say about its economy and the implications for Australia?
Yeah, I think, China is still struggling with its recovery process, as we can see from the inflation figures as well as the PPI figures, which have come out weaker than expected at 16-month lows. So, China, I think at the moment is still struggling, and we're seeing that through the iron ore price, which has come off in the last couple of weeks. And that's kind of what's causing the drop in the material sector.
Any local corporate news that you're looking at today?
Yeah, the things that are coming out today is for Incitec. So they were planning to sell off their fertilizer business to PKT, which is a fertilizer business in Indonesia. But they've retracted that due to management decisions but not being able to implement it in time. Instead, they're going to go ahead with a $900 million buyback, and they're going to run the two divisions separately. For Booktopia, which went into administration last week, they're trying to get more funding so they can continue running. That's pretty much it for the corporate news.
And finally, where do you see the opportunities for investors at the moment?
Yeah, so we've seen over the last month or so, materials have been underperforming, and I think it does present a buying opportunity here. Now the financials have done really well over the last half a year. CBA, Macquarie, they've all done very well. But I think going into US banking earnings season, it is probably a risk on there. So that's something that we're watching out for.
That's Kai Chen there from MPC Markets. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.